and welcome to BQ Prime. You're watching IPO Adda, and my company in focus today is eMUDHRA. It's a company which many of you know because of the digital signatures that we do. It enables the company is coming out with an IPO which is starting on May 20th and closes on May 24th. Price between 243 and 256. It's a fresh issue of 161 crores and offer for sale by promoters and other shareholders of 251.8 crores, making the total IPO size of 412.8 crores. This gives the company the market of nearly 2,000 crores at the upper end of the price band. And joining me is Mr. Srinivasan, who is a founder, promoter, and executive chairman of the company. Mr. Srinivasan, thank you very much for joining us on Bloomberg Quint. To begin with, please take us through you're raising a fresh equity of 161 crores. What is the purpose of that raise?
The purpose is one is there are five-pronged purpose. One is the repayment of our borrowing, which is to the extent of around 35 crore. Then the other thing is the incremental working capital for the next 3 to 4 years. So that is one of the purpose, that is around 42 crore. Then we are expanding the data center with the volume growth. We have a data center and a disaster recovery site. So both need to be expanded. So that is another 43 crore. Then the product, 3 new product we are coming in, which is allied product or existing product, which is the remote signing product, then the IoT solution, and then the certificate discovery product and all that. That will be about 15 crore. Then the US market expansion we are contemplating. So that is another 15 crore. Then the balance is for the general corporate purposes.
Okay, sir. Take us through this market and what kind of opportunities that open up for you in the overseas market. In India, have over 30% of market share of digital signatures. Now you're trying to venture into overseas markets. Which are the big markets and what kind of market you foresee there?
If you see, we are in 2 lines of business. One is the trust services and the other thing is the enterprise solution. In the trust services comprise of, we initially started in 2008 only with the trust services by issuance of digital signature to individual and corporate in India. Today, we have our own route globally accredited and also accredited by the Microsoft, Mozilla, Google, then Apple, Adobe, all the major browsers. So we can issue individual organization certificate as well as SSL certificate globally. Another trend now is the IoT certificates with the Internet of Things improving, so we can issue IoT certificates also globally. So there is a lot of market opportunity, not only in India, but globally for the trust service business itself. So that is number one. Then the second thing is over the last 8 to 10 years, we have built the enterprise solutions business, our own IP, around digital transformation and the cyber security. We have a product called the mSigner, which is our complete workflow engine with digital signature and e-signature, which can completely transform any business into a completely digital workflow-based solution. And the second thing is the eMUDHRA'S authentication solution, which is for authenticating anybody using a digital signature in the backend, whether the right type of signature is used, whether it's a valid signature and all that. And the third is we have also built a certifying authority solution, by which globally we can power any certifying authority globally. So that way we are a one-stop shop around digital transformation and cyber security. So in this lot of market, if you see the Frost & Sullivan report, they have almost projected for our solution, they have projected around 30 to 40% growth over the next 5 years within India. And also similarly, the global market is estimated from $11 billion currently to around $25 billion within the next 5 years. So that way, a lot of opportunities are there. And also we have gone into overseas market over last 3 years. So in the initial year, it was around 10 crore, which was only 10% of our business. Now it has considerably increased to around 37, 38 crore in the last year. And we see considerable growth in Middle East, Africa and South America, then in Europe, and even in the North America also we see a lot of growth. So that way we feel that there are a lot of opportunity, and as a one-stop shop around digital transformation and cyber security, we have a good opportunity to capture the Indian as well as overseas market. In the Indian market, another thing which is really helping us, is the Digital India Vision and the Make in India program, so that our solutions can penetrate into the market as a Make in India product.
Sir, you're raising around 35, I mean, you're using 35 crores for repayment of debt. Will that make you debt free after that?
Yes.
So that entire
Make
interest would come in into your profit and loss P&L, basically flow through your P&L, right?
Yes.
What is the kind of cash flows that you can generate from these operations? I'm asking this because you had an EBITDA margin of nearly 36% for the 9-month period.
Yes.
It's risen from 30.3%. Now
Yes.
that's and is a except for FY20, it has been hovering about 30% EBITDA margins.
Yes.
Where is the kicker coming in terms of the EBITDA margin, given the fact that it's a unique platform that you have for providing digital solutions? And is this 35-36% EBITDA margins which you posted for December 9-month period, is it sustainable going forward?
Yeah, if you see our model, we are more a IP-led company, and one side product and one side the trust services. The both are not a directly proportionate cost model. So as the volume scales up, the gross margins are very high in this business, and the fixed cost do not scale up to the extent of the revenue scaling up. So that's where in the last year, when the revenue has scaled up, the EBITDA margin has considerably increased, and the PAT margin has also considerably increased. So going forward, when we go internationally and the volume expansion takes place, we will get more and more of operating leverage, and then definitely it will lead to increased EBITDA margin and PAT margin. And that definitely, I feel this margin what we have got is definitely sustainable. Maybe it could become more also.
So my next question is, when you say that operational leverage which comes in, what kind of headroom that we can see in terms of operational leverage?
Headroom in the sense, if you see from 132 crore level, when we have gone into the current run rate of 138 crore for the 9 months, we have almost increased 4-5% kind of EBITDA margin. So similar kind of, when the growth take place, maybe similar kind, but when we are going more internationally, some amount of expenditure will be there. Still around that level, the incremental EBITDA margins can be there.
So in that sense, sir, if I'm not wrong,
exactly, we cannot predict that.
Yeah. Yes. So it's basically it's a services company, and so we should look at your growth on a quarter-to-quarter basis.
Yes, yes.
When you go to the national market, what kind of competition do you get? What kind of pricing power you have there compared to your international competitors?
We have good pricing power coming out of India, because if you see the competition in the Indian trust services, there are a lot of other companies which are there, but we are the market leader with 38% market share. Others are the second largest, is half of our size, and the others are much smaller. And one more uniqueness is, while we use our own IP and our own solution, all of them use the third-party IP. So that way, what flexibility we get in terms of improving the product, customer service, and all that, that is quite unique. That's why we are able to get more and more market share for the trust service business. Then coming to the enterprise solution business, almost the major competition is from the Western world only. There are no Indian player. If you see the paperless workflow transformation, predominantly DocuSign, Adobe, those kind of competitors are there. And if you see the other CA solution, the Entrust, Nexus, which are all European and American products, they are all there. And generally, they supply more of a cloud-based solution. We are flexible on on-premise and cloud-based solution. And then we are nimble from this Asian market perspective, and also the European, South American, and North American market perspective. With our nimbleness, flexibility, and also the price advantage what we can offer, I think we are very well positioned to capture the market.
So what about the revenue breakup between trust and enterprise? So what portion of that comes in from trust and enterprise?
Almost 47-48% from trust, 50-53% from enterprise solution. But over the years, the enterprise solution has got more growth potential than the trust services.
Why is that?
because globally there is a lot of need for the paperless transformation and also for the cyber security, both in the private sector, government sector, defense sector, everywhere. So that's where that has much more potential, and that we are seeing based on our order book growth and various other things also. So that way, enterprise solution has a much more growth potential than the and even if you see the Frost and Sullivan report, while they have projected about 16 to 20% growth in the trust service segment, they have projected almost 30 to 40% growth in the enterprise solution segment for the next 5 years.
Who would be your top clients in enterprise?
Top client, lot of top client, even TCS is our client, Infosys is our client, Mashreq Bank is our client. So these are all clients who have given the consent, but there are a lot of, if you see in the DRHP, we have said that out of top 10 banks, all the 10 banks are our customers. Out of top 10 automotive companies, 6 automotive company are our customers. Out of top 20 ET 500 companies, 19 are our customers. So that way, and also in the various government departments are our customers. So that way, we have a lot of good customers.
What kind of product pipeline that you have going forward? Because you are using the fund for product pipeline as well. So what kind of product pipeline are we going to see? Because your R&D expenses are around 2% of your revenues, if I'm not wrong.
But generally, we see we have totally about 240 people in the R&D. But when we classify R&D expenses, only new product development, which is materialized into some product, we are debiting as the R&D. All other things is expensed off in the profit and loss account. So that's why you may think that the expense is very low, but actually 240 people are there in the R&D. And then from a predictability perspective, though we have not published the order book position in the DRHP, and I cannot say about the order book, we see a very good visibility for our enterprise solution, and the visibility has consistently improved over the last 2 to 3 years.
So, sir, how does enterprise, I mean, is it a pay-per-use kind of thing, or how does it work? How does it work at your end?
We use both cloud model as well as on-premise model. In the cloud model, it is a yearly subscription model. And in the on-premise model, it is a license fee model. And for the license fee, again, there will be a cap on the number of users, number of locations, etc. So whenever a client exceeds the number of users, number of locations, they will pay additionally. And moreover, on that on-premise model, on the license fee, we will charge anywhere from 18 to 20% as the AMC, which will recur every year. The trust service, if you see everything, the digital signature issuance is always a yearly certificate or a 2-yearly certificate. So which will be again and again renewed. So that way, entire trust service business is a recurring revenue model. On the enterprise solution, almost within enterprise solution, 20% is a recurring revenue model. So that way, on the overall, if you see, almost 60-65% is a recurring revenue model, and the balance is one-time revenue, which also, with the expansion of the customer and going into more and more department of the customer, we improve our revenue share from the customer.
What about new client additions, sir? Since it's the services model, how many new clients have been able to add every year?
Every year, almost 100-120 clients we have added. If you see now currently in the enterprise business, we have about 640-650 customers, and the client base have grown at a CAGR of almost 40%.
This includes client base, means the new client base or the entire total client base?
Total client base.
Okay. I also see that there is a need for 40 odd crores for your working capital requirement. Since you're a service business and in most cases in upfront payment, why do you need such a working capital requirement?
No, everything is not an upfront payment. If you see your enterprise solution business, it is not a purely services business. It's a more a product business where we sell the product or on a cloud model. And we give to government, we give to bank, and we give to other enterprises also. So in all these cases, on an average, it takes 60 days to realize because sometimes the payment will be based on milestones. Sometimes the payment will be based on achieving certain thing, and after they may say 1 month we want to test the product and then pay. So different kind of payment methodologies are there. So that's why on an average, it is around 60 days, which is there the receivable cycle. So that is why the working capital, when you scale up the volume in a bigger way, the working capital will be required. And
What is the kind of
we may not get the so much of, because it is our own operation, we may not get the sundry creditors in a big way, because we are not manufacturing anything to get a sundry creditor. So that's why the working capital gap will be there. That gap need to be funded.
and what about the kind of receivables that you have today?
Currently,
Yeah, at the end of December.
at the end of December, we had around 52 crore or something receivable. So out of which already the next 3 months, some 35, 38 crore has been received. And the balance, some 14, 15 crore is predominantly mainly from the lot of almost 12 crore is from the government and government related businesses. Other private sector businesses are small. And these are also will be received, because these are all certain milestones. Then there is a 30% retention payment in some of the contract, which will be released after 6 months. Because of that, it is there.
So what about your pricing power in this market? Do you have adequate pricing power, considering the fact there's a lot of this, though you have more than a third of the industry market share, but this industry is also fragmented in that sense. So do you have enough market pricing power?
We normally price 20% premium to the other player, but still because of the brand and because of the customer service and all that, we get good traction. And this 40% market share is not only in this year, this 37% market share. Even 2-3 years even before that, consistently we are around this market share. So that's why I feel we have a good pricing power, and the customers, lot of customers buy the eMUDHRA solution.
And you're able to push pricing on a yearly basis?
No, depend. Sometimes it will be up, sometimes it will be little down, but we don't go too much down depending on the market cycle. So if 1 year, 1.5 year it goes down, then the next 1.5 year it will go up, because everybody, again, somebody suffers loss and everybody want to push up. So it will.
Just wanted to understand, sir, your revenue from operation in FY20, it slipped. So though it grew from FY19 to FY20, but during COVID, we saw a lot of people working out of home and everyone was doing digitally everything. Why didn't we see a huge jump coming in FY20?
In FY20? No, FY18 to 19 was a huge jump. Then 19 to 20, somewhere it slowed down. Then after 20, next year, because of the COVID, we had to reorganize everything and all that. So the jump was almost 15-16%. Then another important thing is we also, if you see currently, earlier we were not figuring any Gartner report, Forrester report, and various other reports globally required. And our global certifications were also much less. So we could not participate in many RFPs and all that. But currently, if you see, one is the Frost and Sullivan report, but otherwise, even in the Gartner report, we are featured for our digital transformation project. And the IDC report, we are featured for the cyber security product. Then all the certifications which are relevant in the industry, like ISO certification, SCI level 5 certification, then EAL4 accreditation. So all these we have got in the last 3 to 4 years. So this is what have strengthened our brand. And again, at the time, we didn't venture into overseas market. Now we have gone into Middle East market, which has considerably increased. So because of all this, currently the increase is much higher. At that time, because of that kind of a positioning was not reached, that kind of growth could not be achieved. So that's why today I feel we are at an inflection point, which can lead to much better growth compared to what was happening at that time. But even if you see 19 to 20 alone, it may see it's a 15% growth. But if you see 18 to 20, it was much higher. In 18, we were 76, 77 crore. From there, we achieved 116 crore in that year.
Sir, you're spending around 15 crores for your product development.
Yes.
And currently, the R&D cost is around 2% of your revenues, which basically means around 3 to 4 crores a year. That's what you're spending on R&D every year.
Yeah.
What is the kind of product pipeline that you have, and this product development cost is spread over how many years?
This product development cost will be spread over 2 years. And if you see last 3-4 years, we have not spent much. But before that, during up to 2014, 2015 and all, we have spent a good amount on the product development. Now we feel compared to our current product, these 3 products are very critical, which can push us very well and then the position us very well in the global market. So that's where we are spending this 15 crore on these 3 products, and it will be spent over the next 2 years.
What are the products?
Product is one is on the IoT development, then the second is on the what is it? Remote signing, and the third is the certificate discovery product.
Okay. And when are these products expected to be completed and go commercial?
Go commercial within the next one by one it will be done. So remote signing.
I'm trying to figure out what kind of milestone revenues can come in, because once these products go out in the market, it will start generating revenue for you. So when do you expect revenues coming from these 3 products which you're going to be developing?
Revenues will start coming maybe in 6 to 9 months. Then because we will launch the product and then go on perfect the product also. So that way it is not that it will all be launched together after 2 years. It will all be launched in the first version will be launched in 6 to 9 months. Then the revenues will start kicking in. Then over time it will be further launched.
There is also, you're investing, I think, 15 odd crores for a US operation where you're setting up eMUDHRA Inc. How big is that market for you?
US generally for the entire IT industry, US market is the biggest market. So we also feel in the US a lot of, because our this digital transformation and paperless workflow product, we have specifically strengthened for the banking industry. So US, there are a lot of mid-tier banks, and if you see the Middle East, we have captured number of banks. India, we have captured number of banks, and now even South America, we have captured one of the central bank in South America. So that way we feel there a lot of scope, and our discussions with the Gartner analyst also suggested there is a lot of scope in the mid-tier banks in the US market. So that's where currently we have only one person in the US market. We want to strengthen it to 8 to 10 people in the US market so that they can go out to the market, go to end customer and seek business, and also enroll number of partners through whom we can seek the business.
So when you talk about enrolling partners, do you tie up with IT companies like Infosys or TCS or a SAP, or which have the systems and who build in, who have a big exposure to the, you bundle it with them or you go separately with them?
No, we do 3 types of partnership. One is the system integration partner, other is the product partner, and then the other reseller partner. The system integration partners are the partners like Infosys, TCS. So whenever they are bidding a larger project with the government or with any large entity in which there is a cyber security or paperless transformation element, then that element they will subcontract us. So that is one kind of partnership. In the product partnership, we integrate our product with the core banking solution like Temenos or like Infosys core banking solution, those kind of solution. And then for those customers who are using those core banking product, they can use our product for the paperless transformation. That is paperless workflow. Then the third product kind of partners is the pure IT resellers who will resell our product. So we have all kind of partnerships.
How big is the individual market for you? I mean, you have spoken about trust and enterprise market, but you allow e-signs by individuals as well, right? E-signatures by
e-signature and digital signature. The trust service business where the digital signature is taken. Mostly it is taken by the individual, so and also organization. So if you see 45% market share is on the trust services business, on this maybe 35-38% will be taken by the individual. Balance 7-8% by the organization in the digital signatures.
So you're saying that this market is expected to grow at 30 to 40% every year for the next 5 years, and as you scale up and bring in more products, you get the operational leverages, which basically keeps your margin about 30% at all times, right?
Yeah.
Is there a scope to go beyond 40% also EBITDA margin in this business?
Possible, but over time we have to work towards it, and we will work towards it.
Okay, Mr. Srinivasan, it's a pleasure talking to you today on IPO Adda. The eMUDHRA IPO opens on May 20th, closes on May 24th, price between 243 to 256 rupees a share, with fresh issue of 161 crores and offers of 251.8 crores. You're watching IPO Adda. Thank you for watching BQ Prime.
Thank you. Thank you, Mr. Sajid.
Thank you. Thank you, sir.